The Florida insurance industry, it's collapsing, which could in fact take down the entire homeowners industry in the entire United States. But it's getting worse, and it's adding more fuel to the fire. Now California is following suit. This home insurance crisis is a total mess. No matter where you live in the nation, I got a question for you. Did your homeowner's insurance increase last year? Has your homeowner's insurance increased this year? Because many Florida homeowners, they've seen their insurance premiums double. And then the following year, they tripled. These are staggering increases, and they're not sustainable. And many are being completely forced out. Not because of actual hurricane or flood, but because they can't afford these out-of-control experiences. I mean, many insurance companies in the state of Florida have completely pulled out of the market. And they say, well, what happens in Florida stays in Florida. But now this is a national trend, and it's spreading like wildfire. Now, many states are nowhere near where this damage has occurred. And now they're starting to feel the pain. Homeowners in other parts of the nation are now seeing what started as a little small ripple in the water, and it's now turning into waves as it gets closer. And many fear this is going to get entirely out of control and will be a tidal wave over the entire nation. And the insurance industry, they actually call this a risk transfer. But homeowners, they're calling it a royal cluster. Is your state next? Now here's the national trends, and here's what we're actually seeing. Today, 12% of homeowners in the United States do not have a homeowner's insurance policy. I know it's crazy, but it's true. Insurance companies are actually dropping homeowners, and they've been told that their houses are too old to insure. Now, I'm not sure if they know about this or not, but not every house in the nation is a brand new construction home. I mean, the fact is, the average house in the United States today is about 40 years old. And this information and this data comes from the American Community Survey. It's getting crazy. Insurance companies are dropping insurance for houses with solar panels. Insurance companies are dropping homeowners if the roof is older than 15 years. Or if your house is newer, some companies won't insure that house if the roof is older than 10 years. Now, one lady in New Jersey, she told me they flew a drone over her house and they sent her a notice and canceled her policy unless she'd replace her 11-year-old roof. She had no leaks and no claims. Kind of crazy, right? And surprised, if you have a claim for damage on your home and the insurance company, even though they take your money and you pay them year after year, they don't like to pay out. And many homeowners talk about how these companies will fight you tooth and nail. And if you have to make a claim, it's a problem. Many homeowners have to hire a lawyer and take them to court to pay. How crazy is that? You spend your whole adult life paying for all kinds of insurance, and then when you need them, they don't pay up. They drop you.
This is it.
But if you have a mortgage on your house, you must have homeowners insurance. And this is causing many issues for Americans because you might lose your mortgage. That's if you don't have insurance for your home. People are moving because of this. If you don't have insurance, you may have to pay a much higher interest rate to that lender. Or you could lose your home entirely if you have a disaster. And if you lose your home to a natural disaster without insurance, guess what? You could end up being homeless or in bankruptcy. So you can see why lenders and these mortgage companies will require this additional homeowners insurance. And if you paid your home off, nobody's forcing you to have insurance. If you got buku bucks, just you self-insure it. But if there's a disaster, guess what? It's all on you. However, back in August 2002, Florida created the Citizens Insurance Company. This is after the great departure of home insurance throughout the state. There was companies who were leaving the entire state of Florida. Now, this may sound like a temporary solution, which it was, but it's created an even bigger problem. Here's why. Since then, more than 172 insurance companies have actually gone into receivership or gone bankrupt or completely pulled out of the state. Now, this shift has directly dumped more risk to the insurance company of last resort. That's Citizens Insurance, which is a state-created, non-for-profit insurer for the state of Florida. Now, this is for residents who cannot obtain insurance through any other carrier. So today, this solution has made Citizens Insurance the insurer of the state of Florida with 1.2 million policies. But this has intensified this crisis on a national basis. Florida and California have been popular resort states for homes for retirees since the 1970s. But a lot has changed. I mean, it's not like it was back in the heyday when many retirees can no longer afford to live here because of the high cost of living. Homeowners without mortgages in Florida and California and even the Midwest now are going naked without insurance. This seemingly insignificant thing becomes the compound effect in the spiral of death. Now, when you lose home insurance in a community, then you start to see home values drop as a result, since a significant portion of the community is not able to purchase and can't even get a mortgage like this. I mean, many people move away from that community and the tax base decreases. Then as the tax base decreases, you have less money for infrastructure, like fire, police, potholes, and roads. And the entire community dynamics completely change. And then the spiral of death continues with the compound effect, and even more people start to leave because there goes the neighborhood and there goes the community. Insurance companies, they've thought of just about everything in the book, just to deny your claim or to pay you enough so that it doesn't make sense to sue. Now, one woman told me that her insurance on her 1,600 square foot house in the middle of the state of Florida, not in a flood zone, and she never made a claim, yet her yearly insurance premiums looked like this. And now, insurance companies are increasing those rates nationwide as they get the rest of us to pay for this tab. So many of the larger national insurers, they're companies like Progressive, Farmers, The Hartford, State Farm, Allstate, Liberty Mutual, AIG, and USAA, they've pulled back from insuring risks so that customers get stuck with smaller companies that are a lot riskier. You know, names of companies you've never heard of. Many of them feel lucky that they actually found a company that still operates in the state of California or Florida. But the problem is, many of these smaller companies, they're far lower in capital resources and they aren't very liquid. So if you are insured, the big question in many people's minds is whether they'll actually collect if the customer has to make a claim. Because many of these smaller companies, they're going to cherry pick the properties that they want to insure and those with the lowest risk. Sad but so true. One gentleman, he told me that it's the only industry that we know of that legally is allowed to accept payment and never give anything in return for it. So now that the insurance ripples are rolling in your direction, they're traveling from Florida, they're traveling from California and on to the rest of the nation, it's affecting many. Now, no matter what state you live in, homeowners insurance in every neighborhood, it's important. I mean, even if you paid cash for your house and it's paid off, you know why? Because if you can't get insurance for your home in your neighborhood or your house in particular, the insurance in those houses, if it's way too high, the housing market price points, they end up dropping because others can't afford to buy in the neighborhood. The insurance crises, it's a real thing. The housing affordability crises, and insurance plays a big part in this thing. And at the same time, a category 4 in the cost of living crises. It's all happening. Now, home buyers have been completely blindsided by this tremendous cost of owning. And people are leaving Florida. People are leaving New York. People are leaving California, and they're leaving many other places. And many have told me that if they had a choice and if they had other options, they would have never moved there where they live again. So if you're still thinking about moving or you're thinking about retiring, be smart. Don't get wiped out. You want to avoid those pitfalls that are costly. Now, I know this is hard, but if you keep an open mind before plunking down your life savings and losing it all in a flash, just keep an open mind. Consider the alternative states or even the alternative areas with fewer chances of natural disaster. You know, there are places where you get lower property taxes and great health care, and places with year-round weather that's not too hot, and it's not too cold either. Places with lots of fun things to do. That's what you want to do if you're retired or you're looking for your next place. So if you found any of this information helpful, consider subscribing to this channel because there's over 1,400 super helpful videos here. I want you to discover those alternative areas. And if you decide to do that, pick up the phone and give us a call at 843-839-9870. You have questions, we have answers. And this is what we do every single day, and we're here to help you to avoid those costly pitfalls. So I'll talk to you soon. Take care.